Hello guys, welcome back to another video after so long, and welcome back to another video of me breaking down a trade that I have executed morning in the morning, I guess during London session. So it has been a very long time that I have posted anything on the YouTube, and in this time period I have blown many accounts, and also I have learned many things, not just about trading but more about myself and my psychology. So this video is only not going to about this trade over here, but also this video is going to about how I have learned this within this time period interval, what I have learned about my psychology and myself while I'm trading. So let's get back into the video without wasting any time. So it was a London session, and London session open, and it was around time of IST. In Indian Standard Time it was around 1 o'clock or 1 or 12:30, around something like that. And it was just London session had just started. And before London session had started, guys, today, by the way, today is now it is 12 a.m. Tuesday, but this trade was in Monday 1 o'clock. Okay, so before placing this trade, guys, in the weekend, in Saturday Sunday, when the markets are closed, I have already my pre-week analysis was so strong that I have already predicted that the gold is going to crash this heavy. We can get this big crash in the gold, and this is just we have seen this is just a point difference in Monday. This whole move was just on Monday. So let me tell you guys, the first of all, let me tell you the the weekend analysis that I have made on Sunday. On Sunday, like before, like on Monday, I have placed this trade here. This trade was placed on Monday, but on Sunday, my analysis was something like that. So in the 4 hour time frame, you can see everything. You can see here, this is a common rejection point, and the price started reversing here and here, made a catching up a bullish trend, then gave a little retracement, and after that it started consolidating. And here also we can see a common rejection point where I drew my support. So the after this consolidation had broken down, as you can see in the 4 hour time frame, let me tell you guys, the bigger the time frame, the stronger the confirmation. Like if you will go to 1 minute time frame, this is 1 month, sorry, and let me tell you. Okay, 1 minute time frame, let me in the 1 minute time frame, why it is not coming, let me show you. Yeah, 1 minute. Okay, it's not coming. Yeah, it came. So let me tell you, according to my strategies or any strategy, whether it's ICT or SMC or simple supply demand concepts you are trading. So this is the move I have captured. Looks quite beautiful in the 1 minute time frame, but okay, anyways. So, and this is it. So yeah, what I was telling was, the smaller the time frame, the weaker the confirmation. As you can see here, there are many breakdowns, like, okay, in some points you can see the confirmations, like here after this doji candle was formed, the trend was reversed, and so, but in many cases, like for example in 1 minute, predicting the next move, like anticipating for the next move and deciding the probability for the next move becomes quite tougher, because after all it's a small time frame, and in the small time frame there is, like, as you can see, the gold is the most volatile market, or one of the most volatile markets. So in 1 minute you can see that there is much more volatility, and in very much in maximum volatility there are uncertainties, and the more the volatility, the uncertainty increases. So the probability ratio decreases, due to which I don't prefer the 1 minute time frame. There are like I can take out from this chart, from this 1 minute chart. Let me zoom out. From this 1 minute chart, I can take out many fake confirmations, like fake outs and stuff like that. And I can show you that one how 1 minute time frame, how lower time frames are not a good idea to trade. So let me jump back to 30-minute time frame and tell you what's the reason behind the trade. uh, I was in a 4 hour time frame, by the way. I was saying the my reason behind the trade. It's around like, oh, where is that, yeah, it's here. Oh, it's taking a long time. Yeah, 4 hour. Yeah. So yeah, so as you can see, what I have said previously, that the stronger the, like the bigger the time frame, the stronger the confirmation. So you can see, as after this candle had formed this bullish candle, you can see the common rejection point where I have drew the support. And after this bearish candle was formed, it is a high volume bearish candle, and it also broke out this support, this little support here, which was created due to this bullish candle in the middle of the trend. So as it broke this support over here, so next price, like here, that you a confirmation is added that the trend is going to be bullish in the next upcoming times. So the trend will be bullish and bullish and bullish. And it was on Friday, actually, so the last day, last working day in the markets. So in the Friday, I think I have blued many accounts, like in the last week I have blued many accounts, and I have you know learned many things about myself and the accounts and the risk management, and also my psychology. So after this broke out, so there was a clean range over here to for the market to cover, because as you can see in the 30-minute time frame, let me tell you that after this broke out, see, if you would have placed the trade here, somewhere around here, let me draw a line, this green line, okay. So after this breakout, if you had placed the trade here and you have anticipated the for the market to go and cover this clean range till here, then it would have been 48 pips, 48 pip range. And if you will see in the 30-minute time frame, so you would have covered. But again, this is a highly consolidated area, highly ranging area. So taking a trade like I never personally, I never use the 4 hour time frame for placing my trades. Actually, I seek confirmation in 30-minute time frame. But the 4 hour, the bigger time frame, like for me, my most bigger time frame is the 4 hour time frame. And I use the 4 hour time frame to just determine a confirmation bias for my trades. So in the 4 hour time frame, in the bigger time frame, the direction is basically confirmed, whether you have to take whether it is easy for looking for longs is better, or looking for shorts is better. So let's forget this hypothetical trade which I was telling you to imagine. But let's jump back to the trade which I have took this small. Actually, the let me tell you the R multiple of this trade. It was around 2.5, which is a very good R multiple, by the way. And in this trade, I also added some quantity when it was moving in the favor of mine. And I have somewhere I have added the quantity here, I guess. I will show you in the MetaTrader, in my funded account logged in history. I will, in the trading history, I will show you. So this was all about it in the previous I was pre weekend analysis. So here you can see in the 1 hour time frame, after the confirmation bias was after developing a confirmation bias, as you can see here, there is a 1 2 3 4 and this support, and this 1 2 3 4 so many this is a very very strong common rejection point, and it is a very strong support. So you know, after, and it was around like the market was closed. So this is a Saturday's candle, yeah. This this is the last candle of the weekend. So when the price was here, basically in the Sunday, weekend analysis was done on Sunday. So well, the price was here because it's closed here. So from the 4 hour time frame, in the 4 hour time frame I developed a confirmation bias. That's the first step. And in the 1 hour time frame I looked for the common rejection points, which due to which I have developed a, I identified a major support, due to which, like, after breaking that support, price is most likely to be continuing the bearish direction. So and it happened like price literally respected this so beautifully, that as you can see, this is a Monday's first candle, in which I never prefer to trade, because it is around 4:30 a.m. You can see Monday 11 November 2024, 4:30 a.m. In the which in I think in the 4:30 a.m. Indian Standard Time, there is not even Asian sessions have been started. I am the like proprietary trader that always trades during London sessions or New York sessions. And I like not even trade during Asian sessions, because obviously everyone has his or her own preferable sessions. So this is the first candle of Monday. It was extremely volatile when the market opened, like, so it left a great wick, rejected basically, and closed above this support. And again a bearish candle was formed, which beautifully rejected this and respected our support, which were and this line was as you can see, this blue line, and swear to me guys, this blue line I drew in the weekend analysis, that's on Sunday, and beautifully this line was respected by this candle. And after, and it is around 6:30, you can see pre-Asian session in the 6:30 a.m. IST, Indian Standard Time. Pre-Asian session starts, Asian Open and pre-Asian session middle, you can see, and this candle kicked in a huge volume and continued to bearish. And it was a great move, I guess. It was very very clean, great move of, you know 100 and 0, like close to 1100 points. And after that it consolidated, and now even like as you can see, after this support has been broke, after the support broke out, the you can see after the support broke out, the confirmation bias that I have developed in the 4 hour time frame became more stronger. So I have only been looking for sells and shorts right now. I have no intention for bias. I have no intention for over leveraging. I have no intention for over position sizing. I have a minimal amount of risk to be taken, because as you can see here, let me show you, before taking this trade I have made two losses, yeah, here, of $59 and $42. And so my risk was up to date, my risk was fixed, and my leverage was fixed. Obviously leverage comes fixed in the proprietary account. And it's all about, so confirmation bias was again became stronger, and in 1 hour time frame you can see it broke the support, and it created a little retracement where my entry goes right there. It created a little retracement, then rejected back and closed here. Basically a hammer candle was formed, not a hammer candle, a doji candle was formed. uh, and again the next bearish candle, and you can like match the entry exits and stops and targets here. It's accurate, pretty much accurate. So it's your duty to match. I will not waste any time. Yeah, so I was, yeah, my entry. So here, the after this long trend and after this little consolidation area broke out, after this little consolidation breakout, we can see again the trend, the bearish trend continues, and a little small retracement, with a doji candle, and with a candle like 1730, means 530, I guess, 530, yeah, 530, like it's around New York session, New York open. And let me tell you guys, when the New York session opens, London session is also like continuing. So basically, when the New York session starts, so session overlap happens of New York session and London session. So at that time, a huge volume kicks in, and the trend basically, if you have developed a confirmation bias of long or short, basically there is a high probability for the trend to continue in that direction only, because a huge volume kicks in the London and New York session overlap. So right there, my entry goes, my stop loss is fixed, my entry is fixed, obviously entry remains fixed, and my TP is fixed. And I also regret this trade, because if I have would hold it for a longer period, then I would have made 7.5 hour trade at least. It was a very good trade, but I have exited early. Okay, then no problem. But still, then my account is in positive, so it's not a problem. In the end of the day, we'll get more and more trades. As you can see, this trade breakdown was of this trade, right, of the $63 profit trade. And this last trade was that add-on quantity, somewhere around here, when the trade was in the positive, when it was going in my favor. So sorry guys for the cat sound, actually it's my pet. So anyways, so this last trade was an add-on quantity, and it was added somewhere around here. So this was it for the video, guys. So I hope you have learned something from this video. And yeah, again I will say, key factor in the trading, in the if you want to succeed in trading, just, I think, not only psychology is important, and not only just learning about developing an edge. Not only developing an edge is important. The most important thing is position sizing. And secondly, of course, if you are hesitating in a trade, and if you are like in anxiety when a trade is running, then just let that kick in your mind, that you are either in a trade which is over leveraged or over position sized. This was the last advice I will give all to the new traders, or the old traders, or basically the traders who are in, like, basically for trading for a longer period of time and they are still unprofitable. So this was the key advice that I would have given to myself 1 month ago. And in the time period, within this time period, I would have not blown many accounts. So it was a good trade overall. And let me conclude this video by here, because it has been a very long video. I basically don't make these videos very long. I try to keep it simple, but I am like sharing different experiences, sharing trade breakdowns. And yeah, this was all for the video, guys. Hope you enjoy this video, and hope you learned something from this video. I have tried my best, and thank you. Peace out.